I've never been in that camp. You know that. I've never been in the 5,000, 7,000, and some of the crazy numbers that get thrown out for gold and silver. But if you're going to believe in those numbers, the fact we got the first part done, we've corrected and consolidated without any really giving back of any real big gains. And now if we can move in a more orderly fashion up, I think that'll be combined with, I suspect, and it's just a expectation. I don't have any certainty in it, but I think the second half of this year for the stock market won't be as strong as the first.
Gold has had a strong year so far, experiencing an impressive rally of 11%. It has managed to maintain prices above the $2,300 per ounce mark, despite a previous lack of significant interest in the precious metal. There has recently been a noticeable sentiment shift among investors, particularly money managers and hedge funds, who are increasingly focusing on gold. Early trading on Monday saw the gold market exhibit some volatility, with prices hovering around current levels as market participants sought clarity on the next direction. This period of consolidation has been viewed as an opportunity for short-term pullbacks and advantageous buying opportunities within a market that has shown resilience and bullish tendencies over an extended period. According to renowned market analyst Peter Grandish, a long-standing target has been set for gold to reach $2,536 by 2025, a prediction initially made when gold traded between $1,250 and $1,300 per ounce in 2015. This target seems achievable and may be realized sooner than expected, possibly within this year. While more ambitious forecasts have projected that gold prices will skyrocket to as high as $5,000 or $7,000 per ounce, these predictions are often viewed as overly optimistic. The current trend in gold, marked by significant corrections and periods of consolidation without substantial retracements, suggests a more balanced and sustainable growth trajectory for the precious metal. On another front, the national debt under both the Trump and Biden administrations has ballooned significantly and is projected to hit an alarming $54 trillion within the next decade. Annual servicing costs for this debt could potentially climb to $2.5 trillion, representing a substantial portion of the country's total income. Faced with such daunting fiscal challenges, policymakers may contemplate difficult choices, including potentially deflationary defaults or inflationary measures. Peter suggests these considerations further bolster the appeal of assets like gold and silver as safe havens against economic uncertainties and currency devaluation risks. We will present clips from Peter Grandish's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I've had a target since around 1250 or 1300. I talk within 10 years, which would be 2025. So this goes back to 2015, of 2536 in 2025. That was my slogan back then. I think that number is very, very doable, and I think it's doable this year. I think the difference will be is we won't go as fast and we won't go and I think that's actually a healthier and more constructive for those. And I've never been in that camp. You know that. I've never been in the 5,000, 7,000, and some of the crazy numbers that get thrown out for gold and silver. But if you're going to believe in those numbers, the fact we got the first part done, we've corrected and consolidated without any really giving back of any real big gains. And now if we can move in a more orderly fashion up, I think that'll be combined with, I suspect, and it's just a expectation. I don't have any certainty in it, but I think the second half of this year for the stock market won't be as strong as the first. And that is good. We don't want the stock market crashing all because we want money to roll over. And I think we're seeing it. I'll tell you what's been interesting in this correction. In the last 4 weeks, I've heard from people about the metals and shares, but more about physical metals that I haven't heard from in years. And only because they went out looking again, because they haven't invested it, and they found stories about me that they reached out. Peter, I didn't even know you were still, involved in that. And I think it's quite interesting that there's an underneath level of any real weakness that's going to buy it. And I think they're not going to get as much as they like, and that'll cause them to keep raising the lid. And the real key pivot is going to be what happens with the BRICS. If I'm wrong and it's just another dull meeting and only a handful of countries join and there's no real announcement of anything of a real advancement, then I'll probably have to say that, maybe that's going to temper or peak gold and silver at that time. But everything and all the meetings that they're having and all the things that people are saying and doing. And like I said, you just have to listen to a few minutes of Andy Schectman to understand what's really transpiring. I think all point to a higher gold and silver price as we go through the rest of the year. They have upped again their target for the level of debt to now $54 trillion in less than 10 years. And I say this to people, you just explain this to me, all you bullish folks. In less than 10 years, the debt is likely to be 50 trillion. Let's just say interest rates are just 5%. That's not a lot. It's historically not a high number. That would mean that debt rolled over or whatever is going to have interest of $2.5 trillion. The best year we ever had was $5.3 trillion as income in the United States. So let's just say that raises for a few years. It even gets to $6 trillion. We don't have a bad recession or whatever the case may be. We're going to be still looking at almost half the entire income of America will go just to pay our interest. Here's the news, Elijah. Government services and the way we've accustomed to life, both on the federal, state, and local level, will cease to exist. We just won't be able to live and expect. And as things get worse, what do people do? They turn to government to do more, not less during tough times, more. So what choices are they going to have? They're only going to have two. We can either go through an horrific deflationary period, watch a lot of the debt default and what have you. And many people felt that's what should have been done in the 2008 crisis. And now that's too late, or highly inflationary. And I believe they'll choose the inflationary. You explained to me at that point in time, take off your I sell metals for a living hat and just explain to me how much more faith or less faith will people have in paper. And if they don't have as much faith as they once did, they still have to turn and go to something else. And that's the other bullish argument for gold and silver. Now,
the concept of de-dollarization is increasingly gaining attention among experts and professionals. Recent actions by the United States and Western nations, particularly freezing Russian assets and discussing potential confiscations, have shaken global confidence in dollar-based financial instruments. This has led to a notable rise in international trade transactions conducted in national currencies rather than the US dollar, marking a significant shift in global financial behavior. This trend poses serious implications for the United States. Historically, countries haven't actively sought to reduce their reliance on US influence to such a degree. This strategic shift could hinder US economic growth and limit trade opportunities across various sectors. Despite these potential consequences, there's a prevailing sense that everything is stable, potentially overlooking the deeper impacts of these geopolitical and economic shifts. Peter argues that the uncertainty surrounding these developments has significantly influenced recent surges in gold prices. Contrary to traditional market expectations of volatility and decline, each dip in gold prices has sparked strong buying interest. This underscores gold's enduring role as a safe haven asset during economic uncertainty and geopolitical tension.
And a couple of people thought when I talked about BRICS, I was going to talk about housing. I mean, that's how off base they are to understanding what's transpiring. And I asked this young person because he said to me, listen, he started naming it's not great countries, it's not a big thing and all. I said, well, hold on a second. These are all countries, whether it ends up 11, it looks like it's at least going to be 40, because that's how many serious countries have now gone through the motion to apply. And before it's all said and done, I think it's going to reach triple-digit members. If all those people at one time didn't purposely shy away from the United States, didn't purposely create ways of not even using its currency and all, does that benefit us now that they're going to do that when they didn't do that in the past? It has to take away growth to us, sales, whatever you want to look at. There's no positive outcome to say that the United States benefits from the formation of the BRICS, where countries are going to purposely look to not trade and to do business outside the United States. And yet, it's just as if everything, is hunky dory. And when I think about it, all the pre-moves that they've made, all the junior banking type of programs that they've set up, all these things now, I'll tell you this. I thought it was going to take 3 to 5 years before they introduce an outright currency or an actual known way of trading around the dollar and be involved with gold. I think the surprise this fall is we're going to get either a very good clue about that, or we're going to see the beginning of it and start to understand what the ramifications are going to be in the couple next years. It's one of the reasons why I think gold has gone up the way it's gone up, and one of the reasons why I believe it's staying up. I think one of the big surprises to people that are even bullish, or people like you that make a living day in and day out, we've been so used to gold rallying and then declining over the last years. And no one's given the credit, given this massive move that we've had, how well it's consolidated here. It's off the main. It's not discussed at all in the main street, Wall Street and all. And every time it looks like it's going to decline, boom, strong buying comes in. And I think that's because there are people aware in groups of how substantial it's going to play a role in all of this, and therefore are going to use any type of weakness in it to continue to accumulate. Look at the story that they planted. That was a plan. I've been at this 40 years. Oh, all of a sudden there's a new story. China didn't buy this month. That's the end of the gold story. How long did that work for? A few hours? A day? It just tells you how different the physical trading now. A couple of days ago, we had that huge raid after the Friday releases. What happened? In just a matter of 4 or 5 trading days, gold made up all that loss. In my younger days, it would take months to make up losses like that. So I'm singing to the choir, and I know many of the people that watch your programs and all, but take heed and take comfort. Gold and silver, and this is something that people that go back with Grandich are surprised to hear, because it was always my second choice. But I think silver right now is acting, if not helping lead gold through this consolidation and correction. Its physical argument has changed dramatically for the better. And I would, if I was going out to do a portfolio now of physical metal, I would want equal weight now in gold and silver. And I used at least 2 times as much gold as I would silver. So I think all in all, this consolidation and correction that we went through was healthy. And it also continues to show that physical demand is still constant, because they can't take this market lower for any length of time.
Given the stable economic indicators and the possibility of further rate cuts, the outlook for gold prices remains cautiously bullish. Although short-term fluctuations are expected, supportive data could increase gold prices in the coming months, creating attractive trading opportunities. Share your thoughts on Peter's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.